Hello, everyone. Welcome to today's edition of The Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in Redmond, Washington. Thanks for joining us every weekday after the close as we try to make sense of these markets together, pick out some key themes using the language of technical analysis, behavioral finance, investor psychology, all of the good stuff. Thursdays are a fun day because we can focus on some of the sentiment reports that come out, AAII and other survey data. I'm excited to have Mark Young from Wall Street Sentiment joining us on the show. He's been a regular guest to really focus on some of the sentiment themes. He brought two new polls that we haven't looked at on the show before, so I'm really excited to hear what that relates to or how those relate to some of the other inputs we've been looking at. Also later in the show, we're going to have a segment called It's All Relative. We're going to look at the mid-cap space. There's so much focus, in most places, but especially on our show, we usually stick to large-cap stocks just because they're names that I think we're all familiar with and we're all following. But if you look at the scooter rankings, if you want to focus on what's working and what isn't, the scooter rankings are a great way to break down a universe. So we're going to look at the top 10 ranked stocks in our mid-cap scooter report, just review the charts together and pick out some of the key themes we can identify. We have some great guests. We're so fortunate on the show. I've enjoyed so much some of the conversations I've been able to have with our guests. Excited to have Mark Young on the show today. Just so you know, going into next week on Tuesday the 15th, we have Jay Soloff from Investors Alley joining us for the first time. On Wednesday, Tony Dwyer from Canaccord Genuity coming back on the show. Tony's one of my favorite strategists. I've known him and his work for many years. Also a pilot, so I usually try to pick his brain on pilot tips and tricks, and then we'll get to the markets as well. Also, we're coming very soon, very close to our year-end programming called Reflections 2020. Three sort of areas of focus that we're going to have. Number one, 10 and 10 strategists, each presenting their chart of the year, their top chart of 2020. So it's going to be a really cool process over 2 weeks to hear from some different experts. A separate set of videos focusing on sector rotation led by Julius de Kempener. And then a separate third series of videos focused on year-end routines and how you review and reflect on your progress over the course of the year. Gaddis Rose, Keith Fitzgerald, Dave Landry. I cut a video for that. It's going to be a lot of fun. So hopefully some really good content for you here at year end to help you take a step back, process what happened this year, and try to start to get ready for next year and beyond. Let's get to our market recap. As I mentioned in the intro, the S&P essentially choppy for most of the day. This is a sort of a non-directional day, I guess, in terms of the S&P, finishing essentially flat, just below the zero line, but pretty much rotated around it for the course of the day. The Nasdaq was up about 0.5%. The Nasdaq Composite, the Nasdaq 100.3%. Technology shares were just up a token amount along with communication services, but overall the index did a little better. The VIX back up around 2250 overall. We've talked about the rise in interest rates. That certainly did not happen today. You actually had a follow through to the downside with the 10-year yields back down just above 90 basis points, and the TLT bond price is up about 0.9%. So trying to chip away higher following in on yesterday's gain. Energy up pretty good, and oil in terms of the USO is up 2.5%. Gold and silver, sort of precious metals mixed, but the energy space up pretty good. Copper as well, and that's what's driving energy stocks up over 3%. So it was sort of the XLE and then everything else when you look at the 11 S&P sectors. And the other sort of cyclicals, things like materials and industrials, certainly lagging behind today. Many of those sectors sort of right around the zero line. Cryptocurrencies, sort of digital assets continuing to roll over, a bit of distribution today, but chopping around, pretty volatile session all around. Let's start it with the chart of the S&P and just focus on what's happened. So, a mixed day, as you saw, as I refreshed the chart there earlier in the day, it looked like we were just going to get further downside, but ended up being a fairly choppy session just above that 3650 level. So, what's happened is 3600 was the line in the sand. I've been talking about that for so long. We finally broke above it with conviction, which to me tells me that absolutely the path of least resistance is higher. I think the trend is positive. And sorry, I don't mean I think the trend is positive. By definition, it is a fact. The trend has been positive. That is not a judgment call. That's just based on the price movements. Higher highs, higher lows. Price will be going higher. Yesterday, you had a bearish engulfing pattern, so a big up day followed by a down day where the second day's range engulfs the first day's range. If you're a bar chart analyst, you call that a bearish outside day. but essentially speaks to short-term distribution. So a little bit lower today, a lower low, but overall sort of finishing mid-range for the day. So sort of a mixed non-directional day. So overall, the trend remains positive in terms of the long-term, medium-term, short-term trends. Price is positive, breadth is positive, which we'll look at here in a moment. Sentiment has been very bullish as well in terms of showing positive outputs from some of these different surveys and some of the different models based on positioning. And the question is, are they too positive, right? Are they so bullish that they're bearish? And it's a contrarian sell signal because of this extreme optimism we're seeing in some of the readings. We'll get to that obviously a little later in the show. Focusing a bit here on just some of the key themes. I mentioned the long-term trend has been positive. We're going to dig into a lot of these charts as part of our normal weekly routine tomorrow on Friday's show, which is where we wrap the week. I did want to point out, though, one thing that I'm looking at are just the new highs. And, we've had a steady stream of new highs. And that's when I talk about the breadth being fairly robust. It's the cumulative advanced decline lines, which have been positive. It's, most stocks, 9 out of 10 in the S&P above their 200-day moving average. That's all net positive, especially long-term. And overall, you've had a steady stream of stocks making new 52-week highs. This isn't showing us today's trading just yet, but as of yesterday, you had about 9% of the S&P making a new 52-week high, which overall is pretty impressive, right? It's sort of a steady increase. This is similar to what you saw back in July and August. It's not at the levels of extreme bullish breadth that you've seen at some of the market tops. So if you look back at December of last year, January, February of this year, you had many more stocks making new 52-week highs. You have a little bit less. This is more of a slow and steady gain type of environment. So looking to see if that number can increase, I think that would add to my expectation that there might be further upside from here, from what I've seen based on some of the different sentiment charts, and also some of the breadth charts like this one showing you 92% of the S&P above their 200-day moving average. That speaks to a market that's that's been so positive that at some point you're waiting for a pullback of substance, and I don't think we've really had that one just yet. If you think of it, since late October, early November, we've been in a pretty consistent uptrend overall. Now, having said that, I think where you do see a bit of a correction, I think a lot of people, if you're just focusing on the S&P and thinking, is that pulling back enough? I think you're missing some of the signal that comes out if you start looking at the sector level and start looking at the stock level. So, just as there are stocks that are in good uptrends that are continuing higher, like L Brands comes to mind as, just a nice consistent uptrend, continuing to break to new highs. Tesla, by the way, just, recovering a good amount from yesterday's bearish engulfing pattern, closing not quite halfway through the yesterday's candle, but close. That would be called a bullish piercing line pattern if you're able to do that. Not quite there, but overall showing a nice bounce off of after yesterday's sell-off. So you're seeing stocks that are in positive trends that are continuing that overall trajectory. You're also seeing stocks that are breaking down. And we looked, this week or last week, I forget when, but there are stocks that are making new swing lows, things like McDonald's, things like Best Buy, American Tower, AMT. There are stocks that are rolling over. And so, it's all a question of, could there be a, quote unquote pullback? And it's just not as obvious on the chart of the S&P. Maybe it's more on the FANG stocks that are pulling back and not really participating in the rally. Is it things like airlines that continue to roll over a little bit? Coming off of a nice run. That's where you might see some, a bit of a rotation. In terms of industries, let's just touch on some of the themes we can hit out there. So airlines have been sort of the best or the worst. I think they were one of the worst groups yesterday, if I remember right, but maybe not. But today's certainly one of the better ones, up about just over 2%, 2.33%. I often, you probably have noticed, coal is often one of the best or the worst groups. I usually just skip right over it. And I'll tell you why. Coal is actually a relatively narrow group of stocks. There are no large cap or mid cap names that are in that bucket. It's only smaller stocks. Arch Coal is maybe the one that you may have heard of, ticker ARCH. But if you look at our industry summary tab, it's only, maybe 10 stocks. Only 5 of them have a scooter ranking. They're big enough to be in there, and they're all small cap stocks. So it's not a lot of cap there. It's not a huge group. And so I usually just skip over it. But having said that, I dug into it. I was looking at Arch Coal and I'm like, wow, it's actually coming pretty impressively off of an oversold condition. It's just like a case study in the RSI indicator, and looking at an oversold condition late October. It comes out of that. You start to see a bullish divergence, higher lows in the RSI, lower peaks or lower lows in the price. We then rally above the moving averages, and now you're overbought again. The challenge with this stock in particular is you're right entering into that previous resistance area. So I'd be concerned about further upside unless we're able to eclipse that. But over about right at previous resistance is a bit of a concern on that stock in particular. So if you wonder why this group's up 13.5%, why do we ignore it? It's just if you look at the market cap, it's not a lot of big stocks that are really driving that. Those are some smaller names that are going to be a little more volatile. In terms of things with some cap that are working, it's autos with Tesla driving that higher. Media agencies, we talked about communication services. Then it's a lot of other energy, E&P stocks, the big integrated. So that's Exxon and Chevron and ConocoPhillips and others. So, some stocks certainly moving to the upside. I encourage you to dig a little deeper into some of those themes and see what breakouts and breakdowns you can identify. We need to take a quick commercial break. Back with my guest, Mark Young. We'll see you in a minute. Hello, everyone. Welcome back to The Final Bar. This is Dave Keller here at StockCharts.com. Appreciate you joining us every weekday after the close for the show. We've had such great feedback from many of you over the months and appreciate encouraging comments about the show and where we're headed. Would certainly love constructive feedback on what we're doing, how we're approaching the markets, what would be most helpful for you on your journey. As a reminder, we'll do another mailbag segment on Friday's show tomorrow. So get your questions to us via email, thefinalbar@stockcharts.com, on Twitter @finalbarsctv, or on our YouTube channel. Just put a comment below the video you're watching. We'll capture all of those and hopefully answer one of your questions on our next mailbag segment on Friday. I want to welcome on my guest to the show, Mark Young from Wall Street Sentiment. Mark has become a regular guest, really speaking to some of the sentiment readings that we're getting. Mark, it's great to have you back on.
Well, it's great to be here.
So we've talked traditionally about some of the more commonly referred to sentiment polls, and I'm super thankful that you brought a couple new ones that I think some of the viewers may not be familiar with. Walk us through these two and what they're telling you now.
Okay, the Twitter users are a different breed of cat, and but I think that their sentiment is useful. There are multiple people trying to gauge the sentiment over Twitter. One of them is Callum Thomas, and he runs a bona fide poll about between 700 and 1,200 people typically respond to his poll, and he asks people whether they're fundamentally bullish, whether they're technically bullish, whether they're fundamentally bearish, or whether they're technically bearish. And as such, it's kind of a different type of sentiment poll. And then he'll agglomerate the two and give you a kind of a chart reading every week. And this is what we're looking at right now. Oftentimes, this is not a bad tell for a contrary indicator, particularly at market lows. Obviously, top picking is always hard. So, we always have to take excessive bullish sentiment with a grain of salt, because many a time you can get very bullish sentiment and the market just keeps marching on, especially at this time of year. But with that said, the bullish sentiment is getting up there, and I'm watching it. But I know last week, it didn't get any worse. It kind of hung in the overdone zone there. I don't think I'd get excited until we had much higher readings. And I also feel that it's not just the bullishness that you care about. It's the fundamental bullishness. technical bulls are bullish for a reason, and it's because the price is going up. But fundamental bulls are listening to news, and that's much more contrary sentiment than technical bullishness. Similarly, technical bearishness as well. Basically, we technicians are a little bit smarter than the average bear. But at the current time, we're not seeing that many fundamentally bullish. Certainly enough to be interested in paying attention. But most of those bulls are technically bullish, and they ought to be technically bullish. The market's going up, breadth is positive, as you noted earlier. The trend is clearly positive. Technicians should be bullish. So that part is not going to be a particularly good fade. But if the fundamentalists get really bulled up, perhaps with deteriorating technicals, then we are going to want to be paying some real close attention. Much like last month, it's sort of just a yellow light right now.
It's interesting, and I've seen Callum's question as you were describing it. I remember seeing that on Twitter and how he asked that bullish or bearish based on fundamentals or technicals. It's a really interesting way of actually breaking down the responses in those areas. Chart 2 is Helen Meisler, which is someone who I'm a longtime analyst strategist. I'm sure many have followed. Talk us through this one.
So this is a newer poll, and I brought it along just because it's interesting. We obviously can't hang our hat on a relatively short time frame that this poll's been run. On the other hand, it's interesting. You can see that there's some interesting correlations between bearishness and lows, market lows, or strong rallies, and bullishness with some either consolidations or pullbacks. Obviously, as with all these things, the top calling is harder than the bottom calling. But I think that over time, this is going to become very useful, particularly when we contextualize it. This is also a nice large poll. There are, I've seen her poll a couple thousand people at a time. This last week was only 1,709, but that's a pretty good sample. And it seems to me that it's going to have utility as we see how this plays out in different market cycles, different seasonal periods, in a bull market versus a bear market. This sentiment we're looking at, has been essentially in a strong bull market, despite a couple of good corrections. That might look very different in a prolonged bear market. That said, I'm pretty confident here that if the market is showing deteriorating technicals, if these traders are more aggressively bullish, it's probably a fade. With a stop, of course, but I would suspect it's more likely to see weakness than strength if these people are bulled up with deteriorating technicals. Similarly, if they're rather bearish, and rather bearish, really, if you've got a reading of more than 7, I think -7. I think that's probably a pretty good buy signal, so long as the technicals are looking pretty good. So
it's two fantastic charts, Mark, and it strikes me as you're describing it. I think plenty have spoken of the AAII survey and the demographics that most likely represents. It tends to be more of a retired, more of a tenured investor responding to this. Some of these Twitter polls certainly could be capturing a younger demographic, certainly a different demographic active on social media. Two great charts, Mark, and appreciate so much your take as always, and look forward to having you back in the new year.
It'll be our pleasure. Thanks a lot for having me.
Thanks, Mark. That's Mark Young. He's at Wall Street Sentiment in Northern Kentucky in the Cincinnati area. It's been such a great experience and an opportunity to learn more about Mark and his work. I've enjoyed having him on the show. And again, sentiment for me is one of the pieces. And I've always found with things like sentiment, if it's not something I'm looking at all the time, which it's not, talking to people that do look at it all the time or following their work can be very, very beneficial. And guys like Mark know their stuff and know the indicators and the results very, very well. Let's continue on with our next segment called It's All Relative. As we've often talked, relative strength, as you probably know from the fact that it appears on pretty much every chart I show. I've got the bottom, I have relative strength in terms of the, stock relative to its benchmark or relative to some other basket of stocks. It's something that's very, very important. And, I learned the value of relative strength in my time at Fidelity and working with institutional investors and, working with money managers who, essentially were paid based on their ability to outperform a benchmark, which means you needed to own stocks that were outperforming. And I found, having spent a little more time with financial advisors and now more recently with some individual investors, I think it tends to be less important in your process, or certainly less prevalent when I'm talking to investors on what they're using. And I would argue that there's a lot of information embedded in relative strength in terms of really answering the question, am I looking at the right chart in the first place? A lot of times we can be so focused on trying to analyze the chart effectively, we don't pay enough attention on making sure we're spending our time on the right chart. So what I wanted to do was just focus on some of the charts that actually were bubbling to the top of the pile. If you look at our mid-cap ranking, so I often on my dashboard I usually have this over here, the Scooter reports, and I'm showing the top 10 in the large cap space. What I did earlier was just switch it to mid-cap. And I often will look at the mid cap and small cap lists as well, and just focus on some of those charts and just think about what sort of signal that we're seeing. I ran this about an hour ago, and I put the top 10 charts into a chart list. And I just wanted to quickly walk through what sectors are represented and what they sort of mean. So what I'm going to do is look at this by, let's see, we have it by ranking. We're grouping it by sector. So we have one stock, Pinterest. I'm sure you're familiar, ticker PINS. In communication services, you have half of the top 10 in healthcare, and they're mostly biotech stocks. Things like NVTA, Denali, it's actually hilarious. Twist and Fate are the second and third tickers in the pile. I thought that was awesome. Moderna, which we obviously know related to the coronavirus. The other four are all within technology. One's renewable energy equipment. This is a stock, Plug Power, which is a hydrogen stock. But, a lot of people, there are different places you could bucket that. You could argue it's a technology name. You could, some bucket it with energy, some with industrials. Just depends on where you want to put those stocks. Not a real clear home for those and like solar names. It's kind of a weird group. But we bucketed it within technology, and then semiconductors, software, and Roku. So let's go through each of these charts and just review, where they're at, and answer the question, why are they appearing in this top 10 list? So number one is Plug Power. This has actually been the top ranked stock in our mid cap scooter rankings for a while now. And if you look at this chart, when people ask me about trend following, a chart like this is pretty much the type of thing I will show them. Plug Power has gone from a single digit stock up to the upper 20s, peaking out just around $30 a share a couple days ago. But what you can see is along the way, it was this beautiful stepwise motion, higher highs, higher lows, pullbacks, met support at an ascending 50-day moving average and return to the upside. It's just sort of this beautiful, consistent uptrend. It's a great also case study in the RSI indicator in terms of its, bullish versus bearish range. In an uptrend, right, an RSI should range from an overbought on the upswings and not really get below 40 on any sort of pullback. And if you look at this chart, it's pretty much at that. We sort of this nice buyable pullbacks as the price gets back to its 50-day, the RSI gets to around 40. That ends up being a perfect entry point as we continue the next leg higher. So that trend persists until it doesn't, right? The idea is that trend is in place. You follow that higher until we start getting a lower high, a lower low. We break down through the 50-day. The RSI gets down below 40. That would all signal that a stock like this is rolled over. But if you look at the relative strength, it's outperformed the S&P by almost 650%. A lot of that coming in the last 6 months versus the first 6 months. So that is chart number one. Just a beautiful argument for trend following, the idea of buying on pullbacks, all those sort of things that hopefully are not surprises to you. Chart number two is in biotech, and we're looking at this in order of scooter ranking, by the way. So the way that the scooter rankings work is you have a large cap universe, mid cap universe, small cap universe. We have separate groups for things like London, Canada, India, and then we have a separate list for industry groups and a separate list for ETF. So all of those stock charts technical rankings are done within that universe, because otherwise it would be like all the small caps move to the top and then all of them move to the bottom, and wouldn't be as helpful. So this is only within mid-cap US stocks. the best trends. Let's continue on here. Twist Biosciences is a biotech name. You'll find some biotech names that have just been on these solid runs, and biotech concerns a lot of people. It's tough to buy some of these because a lot of times it feels like a binary outcome of sorts, especially with like a drug company. But this is a trend that's been in pretty good shape. Higher highs, higher lows, overbought, but that doesn't concern me because I always say overbought means up a lot. If you look at times when this stock has been overbought, it just means that we're accelerating to the upside. Overall, that's a good thing. That's kind of what we want. Fate Therapeutics is another biotech name. It jumped higher, and this is when it really went into the top 10 very quickly. There's a gap higher, but I like the follow-through that I've seen there. Anytime you have a big gap, the question is what happens next. We've seen some follow-through on there, and I think this would be the time on a stock like this to be bumping up your trailing stop and making sure you're locking in some of those gains. UMC is a semiconductor stock. Semiconductors as a group have done very, very well, although there are some that look better than others. And this is a mid-cap semiconductor name. It's actually done very, very well. I like the higher highs, the higher lows. It's pretty far from its 50-day, and I think that's one of the things you'll find with some of these high scooter ranked stocks, because they've done so well, they will accelerate pretty far away from the moving average. The problem is that's a long way down to find support. So I find it can be helpful to make sure that you're bumping up your stocks appropriately, basing it on something like average true range, which will respect the volatility of the name. Appian is a software stock, had a nice move higher. It accelerated. Now it's sort of settled down a little bit, and now it's sort of the decision mode. Does it break to new swing lows? Does it break to new swing highs? And I think a break above 165 would sort of argue for further upside as we continue that trend. Denali Therapeutics, DNLI, is a really good setup, and I like the bearish engulfing pattern, the rotate back. We've now broken above there. That's a very clear support level, so that would be a great stop to have in mind if you're looking at a stock like that for the upside. Pinterest has just been in a solid uptrend, up and to the right, long and strong price trend, strong relative trend. Moderna is a name you probably did not look at a ton until the news came out about Moderna relating to the coronavirus. So far, it's stalled a bit after a pretty impressive run. You can see on a relative basis, it's been a high performer. The question now is this a pause before further upside or a break lower? And I think you wait to see which way the price breaks from here. NVTA is Invitae Corp. It's actually a really interesting setup coming off the 50-day, testing a new all-time high. And I think we're very close to breaking to a new price and relative high, which I think suggests further highs from there. And then Roku. So with a lot of these charts, I think you can see this continued uptrend, the upswing in price, the upswing in relative strength. And I think, betting on trends like that to continue more often than not, that's the essence of trend following. A trend is in place until proven otherwise. That's what I would be looking for there. We need to wrap the show, go to the 3 and 3. It's more like 3 and 1 today, but we're going to get through them. 3 charts in 3 minutes. Here we go. Chart number 1. We talked about sentiment. Mark Young had some two interesting surveys I had not seen and really looked at in depth before. So I really appreciate the difference in terms of also the different demographic that might represent. The name exposure index is one that I followed for a while. What concerns me on things like this is the fact that, essentially active investment managers are leveraged long stocks right now. That tends to happen just before, a month or two before a market comes off of it, because it tells you people are sort of all in. The anecdotal last buyer has made the trade. And now it's just a question of when that uptrend is exhausted. Chart number 2 is Travelers. I want to highlight one stock threatening to break out and one stock threatening to break down. Within financials, insurance companies do not tend to be sexy offense that we think about, but sort of a nice breakout. I like the breakout of the basing pattern, the gap higher, and now sort of the rounding bottom up here. And the question is it able to accelerate to the upside? It's making a new closing high here, and the question is, can it get above the peak there around 137.50? That would suggest certainly further upside from here as the relative strength improves. Things on the other side of this, Procter & Gamble reminds me of like the Home Depot chart. You have this clear line of support. We have made a lower high, which is a concern. The question is, do we make a lower low, as the RSI has already gotten below 40, and we're threatening a new 12-month relative low as well. So I think looking for stocks like that, seeing if they're able to hold support or not would be an interesting tell for sure. That's our show for today. Special thanks to Mark Young from Wall Street Sentiment joining us from the Cincinnati area, sharing his thoughts. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be safe. Have a good night.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.